Hello everyone, welcome to Market Hours India. In today's economy update, the biggest focus is on the rupee, crude oil, gold and silver import duty, inflation and India's growth outlook. Rupee is under tremendous pressure. The Indian rupee remains under heavy pressure. The rupee has touched a record low near 95.8 against the US dollar, mainly because of rising crude oil prices, global uncertainty, and dollar demand from importers. Since India imports most of its crude oil, a weaker rupee makes imports costlier and can increase pressure on inflation. Second, gold and silver duty hike. The government has made a major move on gold and silver imports. Import duty on gold and silver has been increased 15% from existing 6%. The main purpose is to reduce demand for imported precious metals and protect foreign exchange reserves. Because of this duty hike, yesterday we have seen MCX gold and silver prices saw a sharp jump. Gold futures rose strongly, while silver also moved sharply higher. But at the same time, physical gold demand is weak, and the dealers are offering very high discounts due to profit booking and low retail buying interest. Yesterday, the CPI inflation data came. On the inflation side, the India's retail inflation for April has increased slightly to 3.48% compared with 3.40% in March. Inflation is still within RBI's comfort zone, but the risk is rising because of crude oil, rupee weakness, and possible fuel hikes. RBI governors has warned that fuel prices may need to rise if the West Asia conflict continues and crude oil remains high. This is very important for India because higher petrol, diesel, and prices can increase transport costs, inflation, and pressure on common people. There is one positive news from Morgan Stanley. Morgan Stanley has raised India's financial year 27 GDP growth forecast to 6.7%. The reason is strong domestic demand, government infrastructure spending, defense spending, urban consumption, and services exports. This shows that despite global pressure, India's internal growth story remains strong. For the stock market, today's key message is markets may remain volatile because of rupee weakness, crude oil pressure, and foreign investor flows. Important sectors to watch: banking, oil marketing companies, jewelry stocks, gold loan companies, and import heavy sectors may in focus. Traders to watch in live market: so USD INR movement, crude oil price, gold and silver reaction, FII flows, and bank nifty strength. Overall, today's economy picture is mixed. India's growth outlook remains positive, but short-term pressure is coming from crude oil, rupee weakness, inflation risk, and global uncertainty. That's all for today's economy update, friends. Follow Market Hours India for daily economy, market, and nifty analysis. Please note this video is only for educational purpose and not for financial advice. If you like my video, please click and subscribe my channel for daily update. Thank you for watching.